This is John and Nick. We figured we would get together and give everyone a quick update on what we've been up to. We had three things we wanted to discuss. First is some exciting updates on the product end. The second is what we've been up to lately. And then the third is just a general update on the market. Nick, do you want to kick it off?
Yeah, sure. So one thing that we've been working on with Megan, who is a student at Penn, the school we also graduated from, is a website for the Social Security and Roth conversion and other retirement planning that you can then use on the site to make it a little bit easier than the spreadsheet. So we'll show a little clip of the website here and you can see us scrolling through it, but our hope is in the next month or two to be in a position to share it more broadly with the entire group so that people can try making changes and test it out and let us know if we should make any adjustments to it. The idea behind the site instead of a spreadsheet is tax rates can change, the rules and regulations around Social Security or Roth conversions can change, and by having it on a website, we can then automatically make those changes without having everyone fill out their information again. So that's why we've been working on that, and Megan's been making some really exciting progress. We'll have to introduce her to the group at some point as well.
Great. The second thing that we wanted to discuss is some new initiatives that Nick and I have been working on the side. The first is Nick and I are very passionate about investing on the side, whether that's new startups, small businesses. We're always looking for ways to diversify our investments. Recently, we reached out to a few companies from the latest Y Combinator class. So for those of you who don't know, Y Combinator is a startup incubator. It's probably the most famous startup incubator, where various entrepreneurs from around the world get together in San Francisco and work on their new startups. So we reached out to a few of them to hopefully participate in their angel investing rounds. So that's something that's quite exciting. We've also looked into investing in a few small businesses together as well. And we view that small businesses have a slightly different risk profile than startups, right? Startups are high risk, high reward, where small businesses are hopefully lower cash flow multiple, some tangible assets behind them, and therefore slightly different risk profile. So we've been evaluating some of those deals, and when appropriate, I'm sure we'll share some of those updates with the group as well.
Yeah, I don't want to get ahead of ourselves and ruin the surprise, but John and I are actually big investors in a karaoke place that's starting in New York. I don't know if you want to talk about it. At some point, we'll have to do a tour of the building that it's being constructed in, but it's something that we're pretty excited about.
Yeah, I think that investing in small businesses is a really important skill set for everyone to know more about. So at some point, we'll probably do an episode from start to finish. How do we find out about the opportunity? How do we evaluate the opportunity? And maybe we'll talk a little bit about how the small businesses run, what the operations look like, what the cash flows look like, because we do think that this is a particularly attractive asset class, and it's something that's very good for diversifying wealth. But we'll save that for a later episode.
John lives in Long Island City, where the karaoke place is being set up, and it is becoming the new, I would say, hip Chinatown in New York. It's pretty incredible walking around that area. It's very, very Chinese.
Yeah, and I think it hits on some of the concepts that we spoke about in one of our earlier episodes, which is when you make an investment, you want to invest behind demographic trends.
Yeah.
Right? That was a key part of the thesis in investing in the music school. And I think here there's a lot of Chinese American families moving to the Long Island City area. So we're very bullish about the long-term prospects of the business, and that's why we think it's such an attractive investment. Nick, do you want to give an update on what you've been up to lately?
Yeah, sure. So I mentioned it a bit last week already, but I've been spending a lot of time recently looking at different loan funds, and there's so many different types of loan funds. It could vary from loaning against insurance companies and insurance products to loaning directly to companies to loaning against assets. For example, loans against houses is a loan against assets. So I've been working with wealthy families. So thinking along the lines of in the billions to invest in these funds. Long term, one thing John and I have wanted to do is make these products more accessible to everyone. And we're trying to figure out if that's actually doable or not from a legal perspective. But for now, the best way to approach it has been working with these very wealthy families, and we'll maybe figure out a way to expand access to these products over time. For the moment, it's an interesting area, and I hope that I can share more of what I'm learning as I deploy capital into some of these different funds. How about you, John? Should we talk a bit about the markets and the stock side?
Yeah, absolutely. As Nick mentioned earlier, Nick's been recently more focused on the loan side of things, and I've been more focused on the equity side of things. There's been a lot of volatility in the markets over the past month or so. I would say there's three main drivers of this. The first is there's been a big rotation out of the NASDAQ into the smaller cap companies, part of the Russell. Second, there's a lot of natural volatility in any given election year. And this year especially, with the failed assassination attempt of former President Trump, as well as Biden dropping out of the race so close to the election date, it's introduced a lot of volatility in the markets. The third is this idea that people are starting to question the return on investment of AI. Google reported last week. This week we'll hear from many of the other Mag 7 stocks. I think there will be a lot of focus on the AI thematic and whether or not there's still steam left in the trade. So I would say broadly, those are the three things that investors have been focused on over the past month. And the combination of these three things have introduced a lot of volatility.
It's so interesting because I feel like the focus from a stock market investing perspective versus loans, it's just so different because you're so much more up to date on what's moving the markets today versus on the loan side, typically you're giving a loan to a specific company and that company might not actually be impacted by a lot of these events. So it's just two very different asset classes. So it's fun having these conversations and hearing the latest on the stock side.
Yeah, absolutely. And I think this speaks to the classic timing mismatch between private and public asset classes. And there's a reason why some investors prefer private equity or venture capital, because you're not marking your investments up and down on a daily basis, right?
Right.
And to a certain extent, if you believe in the medium term or the long term of your investments, you can hold things on your book for a very long time, and you're somewhat insulated from the day-to-day fluctuations or volatility of the market, because a lot of these things will, have a tendency to resolve themselves, right? Market rotations, the election will have a result by November, and then AI, we'll have a much better idea as we get through the year. So over time, volatility tends to smooth itself out, but in short periods of time, sometimes it can cause big swings in the stock market, that's for sure.
Yeah, absolutely.
In conclusion, there's a lot of exciting updates to come. Nick and I are working on various things that we'll share with the group over time. And we'll try to do some more of these in-person, informal updates. But please let us know what types of content you enjoy in the channels. We're always open to feedback. And hopefully we'll see you all soon.
See you guys next time. Bye.
Thanks for listening in. I'm Nick, and I've worked in finance for almost a decade. If you enjoyed this video, please give it a like and follow our channel for future videos. You can check out our WeChat group for more wealth and retirement tips. Talk to you next time. Bye.